Welcome, and thanks for joining us today. There's a lot of information out there about insurance tracking, the pros of why you should do it, the cons of why it's not worth the investment, and the hows of actually implementing a program. We hope this resource helps provide some insight into common myths and facts surrounding insurance tracking. But first, let's break down what insurance tracking is. Insurance tracking is the process of collecting insurance information to ensure borrowers are maintaining the requirements of their loan or lease. Information can be collected from sources like 1. An electronic data interface, also known as EDI. 2. Paper mail. 3. A backfeed file, which is another way to share information. Or 4. Borrower notifications. Basically, insurance tracking is the transaction of data from the insurance company to the vendor and a way for lenders to keep their collateral protected and help assess their risk exposure. Allied Solutions believes insurance tracking is fundamental to any comprehensive risk management strategy. So today, we want to spend some time talking about 10 common myths surrounding insurance tracking and recovery. Myth number 1. There is one single insurance database in existence. The fact is, there are actually many different insurance databases. A complete insurance tracking solution will include insurance information from a significant number of different sources. Each insurance company typically requires a separate feed with their data, so accommodating all of those different data sources can take a tremendous amount of work. To improve collateral recovery rates, a program that collects insurance information from multiple sources is essential. Myth number 2. I don't need a specialist for recovery efforts. This isn't necessarily true. All 50 states regulate claims differently, and each carrier in each state has different policies protecting them, which makes recovery complicated. A vendor's knowledge of compliance and regulatory issues becomes enormously important for lenders hoping to avoid costly fines and penalties. Myth number 3. Lenders may obtain insurance records without insurance tracking. It is possible to get some information and a small return on recoveries without insurance tracking. However, to maximize the full benefits of tracking, such as the development of collections and customer service strategies, lenders need access to information sources such as police reports, Carfax, or Vinking. Myth number 4. Experience does not matter in recovery optimization. Any good organization can do it. The fact is, experience matters. Data sources, compliance, and industry knowledge are all key questions lenders should be addressing so that their recovery program is effective and efficient. Myth number 5. Recoveries can be optimized with only insurance tracking. It would be difficult to build an optimized recovery program without other tools and integration that help optimize recovery with minimal lender output. This is where it's important to consider a larger risk and recovery strategy to consider how insurance tracking can be effectively utilized. Myth number 6. Using insurance company appraisers is cheaper and better. This isn't necessarily true. Insurance company appraisers are tied to their employer's processes when inspecting. This can lead to common issues such as timeliness of inspections, total loss requirements, and low damage estimates. Myth number 7. You can input a VIN or a set of VINs and instantly obtain insurance information. VIN data can be stale and outdated. Active tracking is the best way to obtain accurate and timely insurance data. Myth number 8. Information may be obtained if there is no lender listed as lien holder. This myth is partly true because it is possible to request, and in some cases obtain, insurance information. However, this policy varies among insurance carriers, and they may refuse your request. Myth number 9. Insurance information is all electronic. Insurance information is not 100% electronic. It is estimated that approximately 20 to 40% of information is paper-based, depending on the portfolio. Myth number 10. EDI insurance is the same across trackers. This isn't true. EDI aggregators vary across the industry, and it takes years to build an interface that connects with the insurance carriers and aggregators that house insurance data. Think back to our first common myth. There isn't a centralized insurance source, but rather multiple data sources. So there you have it, 10 myths that we commonly hear about in the industry. Thank you for listening. Please reach out to an Allied Solutions representative if you have any questions. For more information and educational materials, visit the resources page on our website at www.alliedsolutions.net or find us on Twitter, LinkedIn, and Facebook. Allied Solutions LLC is one of the largest providers of insurance, lending, and marketing products to financial institutions in the U.S. We maintain over 15 regional offices and service centers around the country and are a subsidiary of Securian Financial Group Incorporated. Over the span of 40 years, Allied Solutions has developed the expertise and scale to properly identify and effectively track insurance with over 1,500 lenders and 20 million autos tracked.